In this video, traders, we're going to look at the 10 pips a day Forex scalping strategy. Hey traders, a very warm welcome to you. Okay, so this is the 10 pips per day strategy. Now, scalping, let's get the warnings out there straight away. You know what the score is of scalping, guys. It's a seriously tricky business. Your risk to reward ratio, should I say, is going to be generally 1-to-1. The idea is that you're going to have a higher probability of success with each trade you take, as opposed to getting the edge from the risk reward ratio. That means you've got to be ultra disciplined with your stops. You've got to be ultra disciplined and quick with your exits. Trade this on a 5-minute chart and trade this only on the major FX pairs where your spreads are small. You do not want to be giving up any profit with larger spreads, and make sure you trade with a broker that's got decent spreads. If you haven't got one, I will stick one in the description section below. Check that one out. Right, Forex pairs, majors, 5-minute chart. What else have I got on the screen? Candlestick, obviously. 2 indicators. I have a Bollinger Band set to 20 periods. That's the moving average is 20. 2 standard deviations. Nothing fancy on that. Offset of 0. That will be different depending on what charting platform you use. Stochastics, it will be slow stochastics. With TradingView I've got here, it's just stochastics. Percentage K set at 5, percentage D set at 3, smoothing set at 3. Slightly different settings depending on, again, which charting package you're using, but you can have a look at this and get the idea of the sort of speed of stochastics you want. Okay, the rules are this. Short first. You are looking to take a short trade when price is above the upper Bollinger Band and the stochastics are overbought. Is your filters, 1 filter, 2 filter. Then when you get the next red candle, one more red candle close, you then take a short on the close of that candle. So push above Bollinger Band, upper Bollinger Band, overbought stochastics, red candle, short the red candle, 10 pip stop, 10 pip target. Yes, I know some of you are going, whoa, that's crazy, the risk reward ratio is 1-to-1. I get it. This is supposed to be a strategy where the probability of success is good, so the risk reward ratio doesn't need to be high. Check it out yourself, as always. Do your own due diligence, your own research, and see if this is something you want to implement in your own trading or not. I'm just putting it out there for you guys to have a look at and check out. Okay, example. Let's have a look at some. I've got a couple for you. We'll have a look at some winners, maybe find some losers out there. The good thing about this one, right, is that the losers aren't very frequent. When you lose is that you don't quite get the 10 pips. So let's talk about this in a second in more detail, but you may well want to have an additional rule in there that says, hey, if it goes 5 in my direction, 6, 7 in my direction, I don't let it go back 17, I let it go back 7. So I might pull my stop to break even, because this is pure, not that I'm not an advocate of doing that kind of stuff, but when you're scalping, the rules are a little bit different for the game. US dollar JPY here, guys, pushed down, we broke through the lower Bollinger Band. Have we got the criteria we want? Yes, we have. We've got an oversold condition on our stochastic. We've got the lower Bollinger. We haven't got a green one yet. We wait. We're on the lower, through the lower Bollinger. Definitely here now. Through the lower Bollinger. Here we go. Our first green. Waiting for our first green. First green. Bang. We take our long entry. Our long entry is going to be at 111.07. What's our stop going to be? It's going to be 10 ticks below that. It's going to be 110.97. So we're going to be down here. We're going to have a target of what we were 7. We're going to have a target of 17. So we sit there, chug, and we just about get our 17 fill on that. Now, if your spread is affecting this, you might want to reduce it to 9 ticks profit or pips profit. Additionally, if the ATR on the day or in the 5-minute period you're trading on, using a 5-minute chart, don't forget, if the ATR is so low and each candle's doing 2 or 3 pips, this isn't going to work. You're going to have to sit through too much for it to work. The idea is that it's momentum blasting through the upper Bollinger Band or blasting below the lower Bollinger Band, stalling, and you're looking for that full reversal. That's the name of the game with this trade. If it's messing around, doing nothing in a couple of tick ranges, just forget it and wait until there's a bit of juice on the trade. Here's one here for you guys as well. Pound, US dollar. We're looking for a break below the lower Bollinger Band. Do we get one here? Yeah, we start to get one here. Look, we break through the lower Bollinger Band. Where's the first green? So we're long Here, the close of that is 131.59. So we're looking for 69 as the target. Do we get it? Do we get it? Do we get it? We do. What's the high on that? That's an interesting one. The high on that is 168.2. So you probably don't get it if you're being very, very accurate with that. But again, you're definitely not letting, if it's going 9 pips, you're not getting it, you're definitely not letting that thing turn into a loser. So make sure you scratch that. So anyway, that's a scratch. That's the way it is with scalping. The important thing is discipline, discipline, discipline. And this is a good one to show you actually why if you don't have discipline, you just get run over. It's as simple as that. You've taken a little counter trend 10 pip scalp trade on this, and this sucker rolls over on you and then goes down 50, 60 pips while you're long with a decent sized clip, which you're probably going to be with scalping. You're going to get your head chopped off. Okay, so next thing we've got break through the low. We don't get an oversold stochastic, so no deal on that one. We're going to break through the low again, just about here. We get oversold stochastic, great. Break through low Bollinger, great. First green on the close of that first green is 1.3119. So we're looking for 29. Do we get it? Yes, we just about get it. Bang, 10 pips profit. You get the idea. I'll go through multiple kind of examples, but hopefully you see what we're looking for here. We've got a loser in there, we've got a scratch. We know that if it goes against us straight away, we're waiting for that first green. If it's it went against us straight away, 10 pips is the maximum loss. 10 pips is the target, assuming the ATR is a reasonable level where that's a sufficient target and makes sense for the environment you're in. Don't try and force 10 pips on something that's moving 3 or 4 pips in 15 minutes. No point. Stop. Market starts to go in your direction, 6-7 pips. Drag that stop to break even. It's a scalping, aggressive, hard strategy. It's one for you day traders, you scalpers, the ones who like the action, the ones who want to grab stuff, run, move on to the next thing, grab it, run, move on to the next thing. So if you're disciplined, you've got iron discipline, you like trading in major FX pairs, you like scalping, check this out and see how you get on. Let me know your thoughts in the comment section below this one, guys. If you like this kind of stuff, hit the subscribe button, that's much appreciated. And also smash that like button if you like this kind of stuff as well. All right, take care. See you in the next one. Bye bye.